Hi, welcome to this video day, which is on the 11th of April. It's Thursday, and we're just going to be looking at a trade setup today, which is GBP NZD. We'll go to the charts in a moment. We've looked at the GBP against the NZD in a few videos over the last few months. Now, in terms of right now, we think the pound is getting ready for a big move to the upside, and it's a breakout trade we're going to be looking at today. And in terms of this setup, I really like the look of the technicals, the way they're shaping up, which I'll come to when we get to the chart. Now, in terms of when I'm doing my analysis of the chart, please do keep in mind, it is my view as of this moment in time. It can change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 major Forex pairs, including the one we're going to look at right now, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at the trade setup. Right, on the GBP NZD daily chart, I'll just draw my levels in a moment and go through what I really like about this potential trade setup. But if you're trading any GBP pair, you need to look at Brexit and the sentiment towards it and the fundamentals, in my view, because that's driving the chart. Now, in terms of point number one, sure, everyone's aware of this. EU have granted the UK a 6-month extension to sort out the deadlocked parliament, okay, and get a deal in place that's acceptable to the EU. That is heavily bullish. 6 months. We said this in our last video, that the EU are bound to grant an extension. They can't afford the UK crashing out without a deal. There was all that nonsense about a rogue nation might veto it, but they didn't, obviously. Came through consensus 6 months, that's plenty of time. And mentioned in the last video, they will do a deal. You can check it, for all my logic of why they will if you wish. But in terms of this video, the odds of a no deal now are extremely low, okay? And you can just go and check the odds on that yourself if you wish. So that's very bullish of the GBP. The 6-month delay means that traders can focus on the fundamentals away from Brexit. And there's two sides to the currency, obviously. Our view is UK fundamentals very bullish, Kiwi fundamentals very bearish. So let's have a look. UK data has been solid recently. You very often see the headline, good data despite Brexit. Okay, very solid data. Interest rates would be up by now if it hadn't been for Brexit uncertainty. They'll be going up in the next few months. Also, risk off is bullish of sterling over the Kiwi. Okay, that hasn't come into play yet. We've got risk on, but it's an extra bonus, I think, in terms of a GBP bullish fundamental. Now, the Kiwi, if you look at the New Zealand dollar, on the New Zealand economy, New Zealand dollar has been pretty firm, okay? This is just generally, and yet the economy is in really bad shape, okay? Interest rates are likely to be cut. Yes, severely overvalued against its fundamentals, and it can't even rise despite stock markets being near multi-year highs. That's extremely bearish, okay? Now, if you want to know how bad the New Zealand economy is doing, look at the last export data. Minus 20.7 month on month. It's a huge fall. Obviously, China is its main trading partner. The market is discounting a deal between the US and China. We personally don't think a deal will be done quickly. If it is, it's discounted. It's not going to help the Kiwi. Even if a deal is done, it's not going to help the New Zealand dollar at all, because China's just slowing up really quickly. That slow up is not going to stop, and that is going to impact on the New Zealand economy. Okay, so let's go to the chart. Now, in terms of, just for new viewers, our last position, or our present position, sorry, we took it straight through 192.50 because we didn't feel it would drop through 190. She pushed up towards 195. What we normally do then is we'll take off 50% of our trade when we feel we've got enough. So we had just over 200 pips. So half of the trade goes in the bank. Other half we let run because we're bullish. and we want to put the other half back in on strength, which I'll come to in a moment. Now, in terms of this pair for fresh positions, I think it looks really, really attractive. Okay. Now, in terms of what I like about this setup is these candles here. Okay, very, very low volatility when we're in a kind of consolidation zone, 190 to 195, really. Volatility drops down. That's the warning. A big move is coming. We think the move will obviously be to the upside from our study of the fundamentals and sentiment. So we're alert for the breakout. We want to put our 50% back in. Now, in terms of, I just draw a quick trajectory. That trajectory there goes through the 20-day moving average, which we're looking to provide support, and then this level is the main support level, and then on the bottom of those candles there we've got support. Okay, if I can get my line straight, there we go. So if you're coming in fresh, how would you play it? Well, the obvious level is 195. Okay, 195.30, get clear of round number turbulence. Okay, as always say this frequently, there's a lot of turbulence around round numbers, a lot of order flow. Yeah, if you're bullish, wait for 195.30. Get rid of the turbulence, let all the orders collide, see who wins, bulls or bears. We're looking for, obviously, the bulls to win. As soon as she breaks up, stop can be tucked back behind here, 192.40. Then see if she runs. And when you have low volatility like this, yeah, you're normally going to get the breakout on high volatility. Well, that's what you're looking for. Where are we aiming for on the upside? Hasn't changed since the last video. Up towards the 205 level. Reason this level's picked out is because this big move down here was really to do with Brexit uncertainty and the fears of a hard Brexit. So if you come in on the breakout, you put your stop behind there, you got 3 to 1 plus in terms of risk to reward. Yeah, obviously what we think comes to fruition. And if we do get a high volatility breakout, then you can just trail your stop up. Yeah, in terms of breakouts, I like it when the volatility really drops down like it has done over the last week or so. Then you can expect the big move. And yeah, for me, fundamentals and sentiment, just bullish for the GBP. So we shall see what happens with this one, but I think we're getting close to the breakout now. If you're doing fresh positions, just come in on the breakout. A lot of people say, why do I leave the 50% in? Why don't take the whole amount out into 195? I think it's because I'm just so bullish of the GBP. Obviously, I'll miss a little bit on my second entry, but just bullish the GBP, so I'll keep a trade in and just add back in. So yeah, bullish of the GBP. Right, that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.